Well, let's move on and say hello to our next guest on the show. Vinay Jaising, MD and Co-Head Portfolio Management Services at JM Financial is with us. Vinay, great to have you and good day to have you on as well. I mean, it is a full-blown bull charge once again on the street. It seems that the market has digested those election jitters. But you tell us, I mean, we're looking at this big binary event on the 4th of June. What after that?
Well, I think if you were sitting not in India but any other part of the world and looking at investments in India, you want the big binary event to get over before you take your call of what investments you want to come into the country. So I think that's step one. FIIs who in the last, I would say last month have been sellers of as much as $3 billion, they're already at about 16.5% weightage. One of the lowest in the last 10 years in terms of what their ownership is for India. Today, DII is a little more than what FIIs own in India. And that number is coming at a time where MSCI has actually raised their numbers from, let's say, 6% 10 years ago to 18% today. So, you wait for the election to come in, you wait for a politically stable government, and things should, as far as liquidity is concerned, do much better. So that's step one. What more after that, look at the 100-day agenda, which, whichever political party comes into the picture, which showcase. You have the manifestos already spoken about. If the existing party comes into the power, you will hear a lot more on infrastructure, rails, roads, power, Capex, and the way to move ahead in that. So you'll hear a lot of noise on the budget, whether, the Capex spend is going up. I think these are the two things we would look ahead for. One is liquidity post a stable government. And second is what is the manifesto or what is the road ahead with the party which comes into the power showcases to us. Post that, I think analysts will look at rating their numbers, or just simply put, if the existing government comes into power, just, raising the bar on the P of what they would look at purely for stability.
Vinay, morning. So getting straight down to the portfolio choices and bets from here on, right? You've been a believer in specialty chemicals. In every conversation you've spoken about it. What have you made of the Q4 numbers from the companies in your coverage? What does it tell you about the outlook? And how are the current valuations?
So as far as specialty chemicals are concerned, this is one of the spaces wherein we've gone more wrong than right. Touch wood, the other spaces, including Capex, we've gone a lot more right. The results of most of the numbers which have seeped in are not as exciting, courtesy China. As a result of which, we've actually reduced our weightages in specialty chemicals. Having said that, one of the companies we are looking forward for results to come out is Blue Jet. It's a pseudo specialty chemical moving into, the API/pharmaceutical space. Therein it has three engines running. One engine basically is the sugar-free engine. The second engine is the API engine, and the third is the contrast media, wherein it's a market leader globally. So as far as specialty chemical as a space is concerned, you're close to the bottom, but you probably are a quarter or two away from seeing demand really come up for the rest of the world.
Hi Vinay, good afternoon and good to see you in. And I think on specialty chemicals, you had a couple of stocks that you like. Tattva Chintan, I think, was one of them, and there was one more, I think so.
So Blue Jet, Tattva Chintan and Arkin were the names which we were mentioning to you earlier.
Okay.
Arkin's kind of played it straight. So, we are at the bud incrementally reducing our weightage out there because, we've made the easy money. As far as Tattva Chintan's concerned, it's been rather disappointing, as I was mentioning. The story remains the same, which is in the next 1 to 2 years, you need to see them move to, building capacitors or getting into the EV part of the space. Today, they are, a big manufacturer for CVs, for the SDA requirement and electrolysis as well. The capacities have come up. I think it's very rosy a picture if you were to look at 1 to 2 years. But the problem is when you're looking at markets like this, the other stocks are running up a lot more. I would strongly suggest, you need some of these names in your portfolio because you can't just buy the high PE names. These are rather disappointing names, which as China opens up or as demand of the world incrementally does well, or just simply put as EV takes off, these companies will get a lot more demand than one can imagine.
Okay, all right. Vinay, let's talk about a couple of other themes that you have liked. And some of those stocks, they corrected a little bit, but they got bought into. BEL and Vatek Vabag, both those two in the past we have discussed. And you've got an early actually on both those two names. Currently, what's the call on both these two names?
We're not complaining on both these, as I was telling your colleague earlier. If the manifesto is to invest in Capex, there are two segments where you will see investments increase. One is defense. Remember, India's defense expenditure is just $20 billion on a yearly basis, as against, let's say, $250, $260 billion of US. We're doing two things in defense. One is we are increasing the Capex spend. It's gone up by about 2 to 2.5x in the last 10 years. But the second is we are buying a lot more domestic defense projects. BL is one of the big gainers for projects coming into the country. And what BL gains is whether Hindustan Aeronautics or Bharat Dynamics or any other company gets any electronic requirement, BL automatically gets that story. Its overall order book also is pretty strong, at about 3.5 to 4 times. Having said that, now at a multiple of close to 40, we are more waiting for a correction to incrementally increase our investments. At today's price, we would prefer Hindustan Aeronautics over Bharat Dynamics or Bharat Electronics, but we like all the defense space, period. That's something we want to be invested in. Moving to the water space, again, very similar story to defense. In 2014, the government invested about 150 billion in water treatment. Today, that number has gone closer to $1 trillion. And the number of companies in the water space or water plus management space is literally a handful. VATech shines out here. Last quarter was not too good. Their analyst meet is, I think, tomorrow afternoon, but they still stay with a 3.5 to 4 times order book. They've successfully commissioning desalination of Chennai, which means, virtually maybe 60 or 70% of Chennai will get salt-free water, even if you take it from the tap, which is a big thumbs up for, I think, India as a whole. And once that succeeds, you'll see a lot more orders come up from the other cities as well. In terms of ratios, the company is already between 15 to 20% as far as returns concerned, and very similar number of earnings. Their net cash. And it's at under 15 time 1 year forward multiple. So then valuation's attractive. So we are currently buying these stocks.
Got that. Yeah, we were speaking with VATech back actually just yesterday, and they did make that point that this compression in the order book, which they witnessed in FY24, that'll be a thing of the past, and they're hoping to grow the order book this year. So take your point on board. But Vinay, let me expand that question on Capex and manufacturing. So defense is one, and you've explained very well what you like there and how you're looking at valuations. What about the other aspects of manufacturing? Capital goods companies, for instance, they've had a pretty good quarter as well, at least most of them. But again, what is the valuation dynamic like? Or if you're looking at manufacturing from an auto perspective, then just basically tell us, where do you still find some amount of value if you want to play Capex and manufacturing?
Sure. There are actually a couple. First and foremost, since you said capital goods, look at Kirloskar Oil. That's something we've been, talking with you all consistently, I think, for the last year. Yes, the stock's done well, but it's still under 20 times multiple. It's moved up the chain on the value it's producing on its equipment, but more importantly, it's also improved its margins. What's interesting is, there's a 4,800 crore book, ARCA sitting in them, which sooner than later will probably be unlocked by the management. So this is one thing we like. Again, return ratios are between 15 to 20% plus. So good return ratios, relatively attractive valuation. That's one of the names we like in Capex. Sure. In clean energy, we like a company called MTAR. This is a company which, gets about 60% of its overall order book coming from another listed company in US called Bloom Energy. And about 35-40% of its revenues, it's getting in from companies in the defense and the nuclear space. Earnings growth, fantastic, which is north of 40%. P at about 25 times 1 year forward. Come down from a P of somewhere close to 35-40 times. Results of this stock is weighted, but I think this is one of the small caps we really like.
Sure.
So these are the two names I would focus off as far as Capex is concerned. And then, you get into power as well. You've got a couple of interesting names there.
Vinay, great conversation, but we'll have to leave it here because we've got a management waiting by to